guys, what's going on? Kurt Capper here, and just wanted to put together a quick video walking through a recent trade that I placed here on the US dollar yen. And what I wanted to do first is start with the weekly time frame. That's what we're viewing here right now, is the weekly time frame. You can see that we've had a series of lower highs being put in with relatively equal lows, right? And these lows are holding the lows for the year 2017. If we break under this area, though, as you can see, there's plenty of room for this to fall all the way back down to the lows of 2016. So as things have played out here, we've seen each time we've come down here a bounce back up towards this upper area of resistance, about 113.85 or so. Now we're back down here again. And what's interesting, and one of the things I want to point out here, is the fact that so far we're just staying down here at the lower end of this range, as opposed to bouncing, which has been the case in the past couple tests of this area. So again, you see here, came down, bounced, came down again. Right after we got down here, we bounced with some really strong demand, come down again, tried to bounce and failed. So again, these are some of the subtle clues that we want to be paying attention to. So what I wanted to do is, again, bring you up to speed as far as what the weekly is telling us, and it is my belief that based on what's happening right now, we will get further downside, which means that the dollar continues to drop here relative to the yen. But again, that is kind of the bigger picture of why I'm thinking this way. So with that, let's drill it down to the daily chart. You can see here what's been going on over the last 2 weeks or so, really over the last while, as you can see in this overall snapshot. But what happened here is we had a move down into this support, right? This was the beginning of August. We have the move down. It rallies up into this resistance. Now, at the time, I didn't necessarily think we would fall all the way back down. Now you can see where I entered. This green line is my my short position. The red line here is my stop loss. So I did enter a short position up here because we were into an area of resistance. Now, as I said, I didn't necessarily think it would fall all the way back down, but I left some of this position open for the possibility. I said to subscribers of my Forex newsletter that we would be looking to cover part of the position on a move down into around this area of about 110.40, and then I'd be looking to hold on to some in the event there was to be momentum coming in. And as you can see, sure enough, that is exactly what we got here. So let me show you here the actual entry, because I got in off the hourly. But remember, as we go to that time frame, what the thought process was: move up into resistance. So now that we're here, I'm looking for a failure pattern to set up the move lower. All right, so now if we go to the hourly chart, I have to scroll this back a little bit. You can see that on the 16th of August, that's when I entered this. So right up in here is where we entered this, okay? And what I was seeing at the time, and again, I'm not going to squeeze this too much so where you can't see anything clearly, but remember at the time we had a move up into resistance. So as I said, I'm looking for the failure. Here it is. It tries to move up, pokes to a higher high, comes right back in. That is the signal to say, if it starts to break lower, we want to be getting short. So the entry was taken right here, as you can clearly see based on this green line. And then when it started to break lower, you see the momentum that came in, and that is why I decided to hold on to some of it to see, what might we be able to get out of this. And so as it's played out, you can see we've dropped significantly lower, and as I already said, staying at the bottom portion of this range, getting a big move down here right now as I speak. We have Janet Yellen speaking in a little while at the Jackson Hole meeting. That could certainly help accelerate this to the downside. We'll have to see. But as I said, this is more about how to use multiple time frames to your benefit and align the odds in your favor. So knowing that the weekly is moving lower, the daily rallied into resistance, you go to the hourly, you find a failure to move higher, right? That traps longs and starts to make a stronger case for the bears, and then you enter with your patterns that you look for, and then you manage. And that's all we did here with this trade. You can see you don't need a bunch of indicators or bells and whistles, candlesticks, couple moving averages. That's really all you need. And also, just on the note of moving averages, recognize the fact that these moving averages did not hold price. I mean, it tried, but ultimately the larger trends, being your friend, guided you in the path of least resistance, which was down in this case. Right? So hopefully you found this valuable. Hopefully you found this educational. And you know, if you're interested, you can always reach out to us here at T3 Live customer support at t3live.com and ask about the Forex newsletter. If you have any questions, you can again ask us directly. I'd be more than happy to answer those questions for you. But until next time, have a great day, and I'll talk to you soon.